Alright, y'all. Welcome back to my channel. I know it's been a while. I had some other stuff to take care of, but anyways, let's get on to what I want to talk about today. And what I want to talk about today is, well, Robinhood's back at it again, so here we go. Maybe they won't screw up this time. But what they've done is they've come out with a deal. They've come out with a program where basically they're allowing Robinhood users certain select ones because they haven't rolled it out to everybody, but certain select individuals on Robinhood can log into their account, and if they want to, they can buy into um, initial public offerings, or what's short term is called IPOs. And IPOs basically they're companies that are about to be put on the public stock market, but they haven't yet, and they're in the process of getting put on the exchanges, and they have to work through banks and high net worth individuals basically to buy up their shares. So what Robinhood is allowing you to do as a individual is essentially get access to be able to buy these shares of these upcoming stocks that are to be listed on the exchange, and they're allowing you to buy it basically before it hits the exchange. So you got a chance to get a way better price than if you would buy it on day one when it starts trading. So this, in theory, is a pretty neat idea. Now, if they can execute, this will be real great. But with Robinhood, we'll see. So they say in their blog today we'll start rolling out IPO access. Blah blah blah. Give you a chance to buy shares. Basically, what I said. And what they're going to do is Robinhood is not going to be an underwriter, which basically means they're not acting as a bank or a high net worth individual buying the shares from the company. That's not what they're trying to do. Instead, they partnered with big banks like I think, for example, like Goldman Sachs, which is an investment bank. They've basically partnered with banks like Goldman, and they've said, okay, in this partnership, we want a certain amount of these shares allocated to Robinhood, and they might get like 1 to 3 or 4% of the stock's shares that are going public given to Robinhood through Goldman, and then Robinhood's going to take that amount and distribute those shares to any of Robinhood's users that want those shares. So it's a pretty neat idea. It'll be I want to see how it works before I say one way or another, but the idea is very neat. But how it works on the user's end is they go in, and what they'll have to do is they'll go in and they'll basically sign up for it, and they'll verify that they're qualified to participate in the IPO. When that's done, the user can put in a request for however many shares they want. Now with the IPO like this, just because you input a number of shares that you would like to have does not mean at all you will get some of them or even any of them. You may not get any shares because there's a limited amount, and it's just there's no liquidity, because they're not being traded on an exchange. So nothing is guaranteed. Not even the initial price is guaranteed. So they say here you request to buy shares of the company at their what they call an initial listing price. Now the thing about this is there's a catch here. This request to buy shares of the company at the initial price range is exactly that. It's a price range. Like, for example, I think on the first IPO they're doing is a company I believe called Figs, and I haven't looked into it. I'm not saying whether Figs is good one way or the bad way. I'm not your financial advisor, So go find somebody that you want to be your financial advisor and listen to them. I'm just an idiot on YouTube. So with that out of the way, basically they have this price range. Let's say the initial price range is from $15 to $20. Well, once they finalize the price, it could be anywhere within that range. It might be at $20, it might be at $16.50. You don't know exactly. So when you request shares, you're requesting to be able to buy anywhere within that range. So that's an extra risk that you got to take into account. Not even including the fact that this is a brand new company. You don't have a clue how it's going to perform. So there's that. Also, another thing that I learned after fiddling around, kind of reading into this more, is they add on top of the max price of the range, they add, I think it's a 10 to 20% what they call a buffer deal. So basically, that 10 to 20% buffer range may set you at buying it at, let's say it lists at, or the final price is $20 a share. That 20% extra might bump you up to around, I think, $22.50 is what you initially get in. So they add that buffer on there because there's no liquidity. So, and that's not to say that that buffer is going to be put on there every time. It's just to say that they can and may for who knows what purpose, other than basically giving them room to get orders filled. So that's something to take into account, definitely. But with this program or whatever, not only are they going to allow you to participate in some of these IPOs, but you can watch them and you can track them and read the prospectus. You can read the forms that are sent to the SEC when they file and all that. So you can just really, if you want to, kind of do a deep dive into the company, which is exactly what you should do, or else you're going to lose money like a dummy. Don't be a dummy. So about this program, what they're going to be doing is they're going to gradually roll it out to all of the, I'm assuming most all of their users. And another thing on here is that if you're a Robinhood Gold member or something like that, that does not affect whether you get access to the IPOs. So they're not limiting this just to people that pay for Robinhood Gold. They're allowing many others to do the IPO access. So that's good. They're basically letting kind of whoever at random they want to be able to do this. So this is a pretty neat feature. Now another thing is in IPOs, if you'll kind of look into IPOs, most IPOs when they, like, take for Snapchat for example, when it IPO'd, they had what's for the shareholders that were in it before it listed. Those shareholders have what's called a lockup period, and lockup periods can range for many different days. It can be 30 days, 60 days, 90 days, 6 months. And basically what that lockup period says is those initial shareholders can't dump their shares onto the market until at minimum that amount of days before they can sell their shares. It's basically to keep them from cashing out and making the stock price tank. It's kind of a safety mechanism that the SEC put in, which honestly, it kind of makes a lot of sense because you don't want the stock price being tanked initially. So there's that. Now, what I'm getting to by bringing that up is Robinhood is not going, the people that buy in through the IPO access that they're giving you, they're not necessarily going to put you in a lockup period. They're going to allow you to sell the shares that you bought, But if you sell out those shares within 30 days, I believe, and again, do your own research, read into this. I believe it says that if you sell within 30 days of getting those shares, or no, 30 days of those shares going public, then you will be barred from participating in any other IPOs that Robinhood is a part of for 60 days, I think, or maybe 90. I'm mostly sure it's 60, but it may be 90. Dig into it a little more, do your own research. So if you're looking at like saying, hey, I can get in at these stocks cheap and just ride them to a ride and flip out of them in 2 or 3 days, yeah, you might be able to do that once, but you're not just going to be able to do that all of the time. They're going to cut you off the first time you do it because they don't want people doing it because it tanks the stock price for kind of no reason. So if your idea of doing this is to flip in and out of stocks real quick, trying to day trade these IPOs, I would not suggest doing this. This is not one of those deals you do this to day trade stocks. This is more for if you look into it and you're like, man, I think this is a really good company. I think it's going to do really great. Like, let's say a Coinbase comes up and you're like, ooh, Coinbase stock, I think it's going to do really great. I want in early. Then this might be something you look into. But if you're just looking to flip stocks just for quick profits, I don't suggest doing this. Don't try it. Just be on the safe side. And if you're that way, don't even mess with it. But anyways, guys, I was wanting to go over this and kind of give y'all a little bit of information on it. Dig into it further if you're thinking about maybe playing with this, and also understand this is Robinhood. So, okay, they're like, I don't mean to be blunt, they kind of the bottom of the barrel of the brokerages because of all the crap that they've got for being, well, kind of pricks. But hey, maybe they can do pretty good on this, and we'll see how they do. I'm kind of interested, so I'll be watching this, and if there's anything else that comes up on it, I'll make another video so y'all can be up to date on it. But anyways, y'all, I appreciate it, and I'll talk to y'all later. I'm back. I'll be doing videos more consistently, so I'm sorry about the not doing videos for a while, but I had some stuff I had to do. So, anyways, guys, I really appreciate it, and